Tesla shares, as we were just talking about, they're moving lower today right now. Investors are watching closely after CEO Elon Musk announced his support for former President Donald Trump's presidential campaign. The Wall Street Journal reporting that Musk will donate about $45 million a month to a super PAC backing the former president. But what would a Trump presidency look like for EV makers and EV buyers? Our very own Akiko Fujita has more. So this is interesting, right? Because it seems like Elon Musk fully supporting Trump, but Trump has historically been very pro-oil. So what does this mean for the future of EVs?
Yeah, that's certainly a critical question, Ali, that's being assessed right now. Whether Musk's public endorsement of Trump will be a positive or negative for Tesla. Sales of electric vehicles have gotten a significant bump under President Biden, largely by the tax credits included in the Inflation Reduction Act. And worth noting what those credits are. It is up to $7,500 for a new vehicle and $4,000 for used EVs. And that has made EVs much more affordable for many Americans. There are strings attached. We've talked about this before to getting these credits. That means where a car is manufactured, where its parts and components are sourced. But Tesla's Model X, Y, and 3 have all qualified until now. Now, former President Trump has publicly expressed skepticism of the need for EVs, but his vice presidential pick, Ohio Senator J.D. Vance, is taking that a step further. He's pushing a bill called the Drive American Act, which aims to eliminate EV subsidies and replace them with tax credits to promote gas-powered vehicles. That could create a significant headwind to EV adoption and Tesla vehicle sales at a time when we are starting to see that adoption slow down. EVs accounted for less than 10% of all new vehicle sales, according to data from Kelley Blue Book. And Tesla's market share of all EVs dipped below 50% for the first time in Q2. Musk, for his part, has said he doesn't need the subsidies. He reiterated that this week on his platform X, saying, "Take away the subsidies, it will only help Tesla. Also remove subsidies from all industries." But our very own Ben Werschel, by the way, pointing out in his article about how significantly Tesla's actually benefited from government subsidies. The website Subsidy Tracker estimates Tesla has received 109 government awards since 2007, totaling roughly $3 billion. So, Ali, Tesla or Elon Musk can say that he doesn't want the subsidies, but that's helped Tesla along the way.
The American presidential elections will definitely take their toll on various businesses, industries, and sectors. We've seen this evident in the effect Donald Trump's statements had on the stocks of AI-based companies. But this is nothing compared to the effect these elections will have on the electric vehicle industry in case Trump ends up in office once again. Therefore, many consumers and stock investors are re-questioning their positions in EVs, with the most prominent of them, Elon Musk's Tesla. But why so? Is a Trump presidency good or bad for Tesla? And what might be next for electric vehicles and for Elon Musk's company? That's what we will find out in today's video. So please, don't miss out. But first, if you want to keep up with NVIDIA's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
But mixed reaction, though, on Wall Street, right, Akiko? What are you hearing from analysts and investors about Musk's support of former President Trump?
Yeah, Wall Street's certainly divided, at least in this initial reaction to the impact another Trump presidency is likely to have on Tesla. You've got Wedbush's Dan Ives, who argues that a Trump presidency will be bad for EVs, but Tesla, he says, would be exempt from any of those headwinds because of Musk's cozy relationship with Trump, saying that the rewards outweigh the risk for Musk. Betting on Trump losing the IRA benefits for the industry will be negative for the EV industry, but give Tesla a scale and piecing advantage. Bearish for the sector, bullish for Musk and Tesla. Now, on the other side, you've got Ross Gerber from Gerber Kawasaki saying he doesn't buy that argument, saying that if you take $7,500 out of the price of a Tesla, it's going to be detrimental For sure. And he says, look, it has been delicate pricing for Tesla when they're adjusting prices by $1,000 here and there to boost demand. So this is not going to be good, at least in his initial assessment. Then you've got Guggenheim's Ron Yeskoff echoing that sentiment, saying that tax credit has been a key affordability enabler for Tesla. He also raised concerns about a 60% tariff Trump has proposed on all Chinese imports and the impact that's likely to have on the price of a Tesla car, given that Tesla sources Chinese batteries for some of its cars. Overall, though, Ali, worth noting that it's not necessarily that Wall Street has dampened its sentiment on Tesla. You look at where the price target is right now. Street high is still at $310 a share from Morgan Stanley. And as you noted in that earlier discussion, there's still a lot of drivers here, including the robo-taxi, expected to be a significant driver for the stock that has now been delayed, at least the launch, until the fall.
Yeah, I'm sure we're going to continue to see changes leading up to the election. Akiko Fujita, thank you so much.
In his recent speech at the Republican National Convention, Donald Trump expressed his openness to Chinese automakers manufacturing their cars in America instead of Mexico, which he believes will create a very large number of domestic jobs. On top of this, former President Trump threatened tariffs on Mexican auto imports to make these cars more expensive, with the goal of encouraging people to buy American-made cars and protecting American jobs. Trump also added that plants will be built in the United States and Americans will man those plants. He also said that if automakers don't agree with his new policies, Trump will put a tariff of approximately 100 to 200% on each car, and they will be unsellable in the United States. However, Tesla chief executive Elon Musk has been a supporter of Trump's run for president, despite the Republican nominee's position against climate change solutions and a view from Wall Street that a Trump victory would be considered bad news for the EV market overall. But Musk believes that he can change this. He said that he is persuasive, and a lot of Trump's friends own Teslas already, beside the fact that Trump himself has openly been a fan of the Cybertruck and Elon himself. Therefore, he thinks that these factors can play a huge role in changing Trump's views regarding the matter. Pat Ryan, MarketWatch's CEO, said that the potential entry of Chinese automakers to the U.S. would bring massive price pressure to EVs and break the lower price point EV market wide open from a supply perspective. EVs made up 8% of new car sales in the U.S. this year, up from 7.2% last year. Despite this overall growth in EV sales, Tesla's market share in the EV sector dropped to less than 50% in the last quarter, according to Cox Automotive. Stephanie Valdez-Streety, Director of Industry Insights at Cox Automotive, stated that the overall competitive landscape for electric vehicles is intensifying. This increased competition is leading to continued price pressure, gradually boosting EV adoption. So, how's Musk reacting to the ongoing concerns towards EVs? Let's find out. Hello, everyone, and welcome back to Investocracy.
There is this question out there about what Elon Musk does to potential Tesla consumers. And there's obviously a big difference between Tesla, the stock, and Tesla, the company, and the fundamentals. What can you tell us about the potential impact that Elon Musk's support of former President Trump could do to Tesla sales moving forward?
Well, I think by and large, Tesla sales for the first decade or so were by people who supported Elon Musk's vision for an all-electric future. Clearly, EV sales have been hit over the course of the past years. We've had kind of a bit of a market saturation from a demand perspective. Whether or not Mr. Musk's support for the president to the tune of $45 million a month, or about $180 million through Election Day, has a real impact by more of his the potential for left-leaning consumers to buy Tesla vehicles. I think it remains to be seen. I think you're really talking about a very marginal buyer that's going to base his or her decision on whether the CEO of Twitter or X is supporting former President Trump.
The whole EV industry has suffered the past couple of years due to the shortage in demand, and Musk is very well aware of this problem, and in trying to tackle it, he has been implementing a price reduction policy in order to boost sales, but without affecting the quality. This can be seen in the current pricings, For example, one of Tesla's best-selling cars, Model Y, was selling at $62,990 back in 2022, but now it's being sold at a price tag of only $49,990. This is a downside of more than 20%. This might not be considered low enough for many consumers, as many Americans are still struggling with high interest rates and financial pressure. Most households can only afford a $400 monthly car payment, which equates to a $20,000 loan over 60 months. However, due to rising auto prices, the average monthly car payment has increased to $756, making it difficult for many to afford new cars. On the other hand, China's BYD has been producing electric vehicles at affordable prices. For instance, BYD's best-selling Chin Plus sells only for $15,200 in China, while its new Seagull sells for only $10,000. European and American brands sell some Chinese-built models in the U.S., but a 27.5% tariff on these cars poses a significant barrier. Additionally, bipartisan efforts aim to ban the import of Chinese-made vehicles entirely, according to Consumer Reports. Co-pilot's Pat Ryan said that Chinese automakers manufacturing in the United States could change the market forever and lower the prices of EVs drastically. That being said, those made in the U.S. are unlikely to be at the $25,000 price point, which would be very affordable to many consumers. Alongside his willingness to introduce Chinese automaking in the United States, Trump has sharply criticized the Biden administration's investment in EV infrastructure and promised to end federal tax incentives that are applied on every electric vehicle purchase. Furthermore, James David Vance, Trump's running mate, went as far as offering rebates on every gasoline vehicle purchase. The cost difference between gas and electric cars is getting smaller due to tax credits for electric vehicle buyers, says Joseph Yoon from Edmunds. If these tax credits are removed, many buyers might avoid EVs. Additionally, if EV subsidies and infrastructure improvements slow down, it would further discourage EV purchases. So, what does this mean for Tesla stock? And should investors stay away from EVs if Trump gets re-elected? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Brian, what have you seen in the past just in terms of customer behavior when you take a look at what we have seen for past buying power and I guess the ability to spend, or willingness maybe is a better way to say that, to spend from consumers? Have we seen boycotts like that in the past? And I guess how closely are you tracking that as a portfolio manager?
It's a really good question. I think most of the time from a consumer's perspective, it's been short-lived. At the other, on the other side of the fence, you have Bud Light, where we've clearly seen sales for the past year drop off a cliff, so to speak, for some of the marketing materials that they put out. So it's not necessarily something that I think is too concerning, as typically speaking, major corporations have avoided taking major stances from a social or political perspective. But we're watching it, and it's not a real big concern right now, but something to keep an eye on as we move forward towards the next few months into the election on November 4th or 5th.
Even though he might seem like he's totally against them, Trump had actually said that he is all for electric vehicles and admitted that they definitely have their application. But he made it clear that if somebody wants to buy a gas-powered car, gasoline-powered car, or a hybrid, they're going to be able to do it. So, at the end of the day, Trump will not fight EVs, as he only wants to give consumers options. Wedbush Securities' Dan Ives wrote in a recent note that while a Trump presidency would be broadly negative for EVs, it may prove a positive for Tesla. This is because Tesla has a scale and scope that is unmatched in the EV industry, and this dynamic could give Musk and Tesla a clear competitive advantage in a non-EV subsidy environment, adding that the company would also benefit from the fact Trump is likely to impose higher tariffs on China's EV giants. And many analysts agree, saying that Tesla has the market share and the production scale and capabilities to survive a withdrawal of government subsidies, while its rivals do not. So Tesla stock still seems like a good buy, despite the current political uncertainties, especially if your aim is long-term investment. But what do you think about Tesla stock? Is it a buy at the current price? Let us know your thoughts in the comment section. And don't forget to tell us what your valuation for Tesla is. If you would like to know what companies like Tesla have been up to these past few days, go ahead and click on the next video on your screen. See you there.